now joined by Peter McGuire, CEO, AustraliaTrading.com. Hi, Peter. Very good morning. Well, thank you so much for joining us this morning. Let's talk about the global markets first. And, U.S. markets is near that record high level. So do you believe now the focus is somewhat going to shift to the commodity market because that is where all the action is going to be? Brent has been seeing steep losses. So what's your expectation going forward in this particular week?
Well, good morning, and thanks for inviting me on the show. Yes, it's been a dynamic. When we look back over the start of this month, what we've experienced in the early part of August has been just extraordinary. We understand what happened as far as the gold rally the other day with COMEX, and then President Trump quelling those concerns as far as 100-ounce and kilo bars. So there's the first part. Oil has continued its downdraft off very, very heavily, and that downdraft I think is going to continue. WTI focus is early 60s, if not into the 50s, sometime over the next couple of weeks, and unless you see something happen geopolitically or, of course, with weather outages. But the theme is going to be softer energy prices, and that's going to be great for consumers, both globally, and that'll help, naturally, inflation.
That's as far as global markets set up and the focus on a commodity market is concerned. But let's now put the spotlight on oil in particular. There are hopes of a peace deal between Russia and Ukraine, and this is likely to create a supply glut in the global oil market. And this is the reason oil prices have now fallen near that $65–66 per barrel mark. How do you read this, and what does this mean for global supply equation then? And how much could oil prices fall by then in the global market?
Well, everyone's keeping a very close focus on, naturally, those discussions between President Trump and President Putin in Alaska. So there's the first part. If there is to be an end of this whole conflict story, then that's going to be wonderful, first off, for humanity. And secondly, the next part is, we believe, naturally, cheaper energy prices with the glut rolling into the end of Q3 and early Q4. Cheaper prices, probably well into the 50s as far as energy. And that's what everyone's been tipping, because we've got excess capacity, excess production. There's no shortfalls there. OPEC Plus want to see more production entering the market. The big, massive producers, the likes of Saudi, certainly America's producing big numbers, and of course what's going to happen from Russia. So all of a sudden, I think we're going to see again that downdraft continue, and going to be wonderful for consumers and naturally drive inflation certainly lower, which should help equity markets as well.
That's right. Peter, now I was talking specifically about India. You already mentioned about the peace deal that might take place later in the week. But talking specifically about India, Trump has threatened 50% tariffs on India because India continues to buy oil from Russia. What kind of an impact do you think this is going to have, on the oil market when that August 21st deadline comes in?
Well, we've got to get through to the August 21. I think this is going to be the relationship that Prime Minister Modi and President Trump have. I think is a very solid relationship. So that's the first. I want to stipulate that. The second one is, yes, there are timeline deadlines, but I feel as though that in the art of President Trump's normal negotiating style, I think there's going to be extensions given. And if Russia was going to say, and they get those talks over the line, and you get Ukraine playing the same game as Russia, and we see an end to this conflict, then that's going to ease the purchasing of Russian crude as far as President Trump's concerned, I would think. So I'm certainly concerned, but I'm not overly concerned, because I think the timeline perspective will play to India's favour coming into September.
So that's as far as Indian markets is concerned, but also wanted your thoughts on the precious metal market then, especially gold and silver. What's your outlook over there with global peace deal being signed this week and tariff tantrum largely being behind us? Do you expect safe haven demand to come down gradually then?
Well, not necessarily. I think central bank buying is going to continue, and we've seen that very aggressively across the likes of Poland, China, and numerous other countries stepping up to the mark and purchasing. Then you've got to look at retail investors and the man and woman on the street. Their consumption is growing. The next part, of course, is what do we see as far as Fed policy with easing of rates? Are we going to see a rate cut in September and then successive cuts? They're saying another 60 basis points could be strapped in in Q4. So weaker dollar, that's going to, I think, and you see inflation hopefully come down with cheaper energy prices. I think we're going to see more upside potential for gold and silver leading into Q4. So, don't wipe it out yet. It's been an enormous rally so far in the first 7 months, and I believe that will continue leading into the rest of Q4.
Okay, like you said, there's been an enormous rally in the first 7 months when it comes to gold. But where do you see the prices, closing in by the end of this year, that is 2025?
I still believe that 3,800 is a target I'm keeping a very close eye on. We hit 35.40 the other day on COMEX. I know that was an anomaly that presented itself to the market, but it's still an intraday high. I think you've got to look at 3,800, and that will be, I think, achieved sometime October, leading into that Q4, October, November sort of timeline, and I wouldn't be surprised to take higher numbers out than that. First off, I want to get to 3,800. I think it's achievable, and then we'll look at something more concrete moving forward. But the overall momentum is, I think it's very, very solid and strong at the moment, and it's very, very bullish. So I think that's the normal course of events. People are long, people are bullish, and there's a big theme out there globally to be a part of that bull market.
Very bullish, that's the word coming in as far as precious metals is concerned. Peter, thank you so much for taking your time out and joining us this Monday morning and helping us understand what the outlook is for the commodity market going forward. But let's get going then, and let's put the spotlight on all the stocks that will be in focus